Hey, welcome back to the Hub channel this week, and I have Jeff Beamer back with me again. And Jeff, why don't you go ahead and remind me, last week you gave us a couple of trades, and I think you're going to go over those trades. Well, you gave us a couple of trades, you gave us a loser, but you gave us a huge winner that overcompensated for that loser. And I love that because obviously it's a winning week. It's a profitable week for everybody here. And I love what you've been giving us week in, week out and this stuff. And guys, by all means, if you guys enjoy this content that Jeff's given us, you can go ahead and subscribe to the channel here because Jeff is so full of knowledge and so full of information that you guys can keep coming back to watch these videos. And I just enjoy Jeff so much. Thank you so much, Jeff. But anyway, get into your show here because I want to hear about the market and everything else that you got going on.
Well, I appreciate it. I'll get into those trades here in just a second. You know, just as a reminder, 2 weeks ago we went 2 for 2. And then last week we were at 50%, 1 for 2, and we'll dissect those here in just a moment. But let's take a look at the broader markets here. You know, I drew just a little trend channel on it so that we kind of got an idea of the current pattern. You know, when you don't have anything on your chart, sometimes you get a little. You can kind of question yourself, what's happening? Where's the trend right now when you get a little bitty pullback like this? So there's a couple things I do. So number one, I like clean charts. You know, a lot of people put a lot of analysis, a lot of studies and tools all over their charts, and it gets real cluttered. As you can see, I keep my charts pretty darn clean. All right, and that way I can do my analysis. So one thing I want to do when I get a market like this, where remember 3 weeks ago we talked about this market would roll over. Go check out that recording as well, and the market did. So we're in a little bit of a pullback right now, and one way that I do that is by looking at the Heikin Ashi candles. Now these are much more smoother in identifying trends. And so right now you see that the candles are red and they're what I call wicky once again. Now, if you look at the green candles, the last green candles about 2 weeks ago, you can see that there's wicks on the tops and the bottoms of these candles. All right. And that just means indecision. Well, on this little pullback here, we have the same sort of scenario. We're getting a little bit, a little wicky. And what happened today on the Heikin Ashi candle is a big indecision day. So we will get reaction either way. Tomorrow will be either another big up day or we'll have weakness and drop. All right. And this will help. We can identify that through these Heikin Ashi candles. All right, so then another way that I look at the markets is by using the regular candles. And then I'll throw up maybe a simple moving average. And here I have a 21 period moving average and a 161 period moving average. Now, you will not hear those two numbers from really many other people than me and another technician who runs his own firm. But these are two Fibonacci numbers, and you can see here the market really respects that slower moving average, that 21 period moving average, which we have dropped below. Okay, and so lastly, then I'll clean that up and I'll put on my Elliott wave count because this is a beautiful Elliott wave pattern, and as you can see, we are in that fourth wave pullback here in anticipation of moving higher up to that fifth wave target, which you can see here. That target's at 490, but it's a little early. In fact, a couple of weeks ago on this show, I talked about the fact that we have two targets. We have a shorter term target of 430 on the SPY and a longer term of 490, okay, by the end of the year. And so what I did was, I'll come back in just a little bit on this, all right, and you saw it right at the beginning. I put a little trend channel on. This will be my line in the sand, okay? And mark that up there. All right, so now we have this little pullback that's in this channel, and I can say this is my line in the sand. As long as we're trending downward, I'm not going to pull a bullish trade on. But as soon as we cross that line and start moving higher, possibly retesting this high right here, that's when I'll put something out a little longer term, up around that 490 level. All right, so we're looking at that right now. Right now, I have that trade on at 430. I have a butterfly on the Spider Index Trust. 430 is my target on that. All right, so just rehashing a little bit of what we've talked about in the past. Now, the bond market is still kind of going a little crazy. We are still inverted on the curve. Last Friday, I haven't seen today's update yet, but last Friday we were inverted by 73 basis points, well off that 100 basis point mark. But what's more disturbing are mortgage rates. Mortgage rates nationally have ticked up to 7.25% for the average 30-year mortgage. We're not quite to the highs of October of last year when we were at 7.3, but we're headed up in that direction. And I want to be very careful with, what our long-term outlook. So Brandon, I have a slide that we put up that I generated about some of the news. Can we show that here real quick? Because headlines often get confusing. If you look at this snapshot of headlines that came out today, notice first the top headline and the bottom headline. Okay, so the top headline essentially says consumers' year ahead inflation expectations fall to lowest rate in 2 years. Okay, fine, that's consumers, right? Well, then you get down to the bottom, and all of a sudden it starts talking about consumer sentiment slips in August, inflation expectations stay elevated. Now, what are you to believe? Are they lowering expectations? Are they raising expectation? Okay. Then you get something like U.S. housing market value hits record high, driven by supply shortage. Well, in certain places in the U.S., yes, that's an issue. I happen to live in one of those areas here in the South, and man, we are way behind. We've got a lot of people moving here. Housing, both single family homes and multifamily apartment buildings are in short supply, and that causes pricing to inflate. All right. And another big headline before we move on are the student loan repayment programs scheduled to restart in October. And a lot of economists think that is a big deal as it relates to our buying power and our ability to spend, because if a lot of people are having to repay their debt that they signed the bottom line on, then they don't have money for other things like groceries or maybe going to the movies or extracurricular activities. So when we
What do you think about that, Jeff? Do you think that's the case? Do you think that's what's going to happen? Are you agreeing with these guys? Do you think it's going to be some sort of a big event coming up here?
I think people are very quick to adjust anytime that they get a bonus from the federal government. A lot of people, when we had during COVID, we had certain payments that were made, and a lot of people just they spent that money. That wasn't saved, that was spent, and now the spending continues. Well, when all of a sudden you have to start repaying your student loan, well, then that money is not going towards either groceries or your car payment or whatever. It's going back to pay that debt. So it could be a big deal. I know that I've seen some people over the years where they were just crushed by the debt they accrued in college, and it really affected their livelihood. So yeah, we could see a big impact here in the fall, which is really interesting as that kind of ties into what we're seeing in the charts. A little pullback here going into the fall, and then maybe an end of the year Christmas rally. I still have that target up here at 490. And as it relates to the other markets, well, I spent a lot of time here today talking about Spider, but just know, NASDAQ rallied today. IWM, which is the small caps, it dropped a little bit. As I mentioned before, bonds are kind of crazy. But let's get to some tradable ideas. So first, I want to talk about the two trades that we addressed last week, okay? So let me start off with a loser. Everybody kind of highlights all their winners. And, well, being a money manager and a former money manager, I was never afraid to put my foot forward and say, I'm showing all my trades, and I'm just not afraid. I will outperform the market. Period. That's what I do. That's what I've always done. And a lot of people try to sugarcoat. Okay, well, here's a losing trade. So last week we talked about Rivian, RIVN. We placed a straddle. You can see here on the risk graph that I have these two black lines, one going up, one going down. The point is right where we placed those strikes. All right. And we went through the earnings event, got a little bit of volatility, but not enough to make this trade profitable. So today, which is this green candle right here, we were looking to take this trade off this morning for a very small loss. The loss actually was about $174 on this trade, okay? Which out of a debit of over $700, that's what this straddle cost us, was over $700. We lost $100 off of it. Not bad, okay? I'll take that all day. When I have a trade, our other trade last week was Upstart, and boy, did we get a follow-through move on earnings on Upstart. This thing dropped like a rock. Okay, earnings day came out and the stock tried to hang on, but boy, the next 2 days, this thing dropped like a rock and we profited over $800. You can see here on the chart, that price right there where the dark blue line shoots across the risk graph into the profit zone. And if I brought that straight down, in fact, I can leave my mouse right there and you'll see the number pop up, about $806 profit. All right, so when you make $806 on one trade and you lose, about $178 on another, that's a profitable trading system at 50%. One winner, one loser, and you're making money. That's a pretty robust trading system right there. Now, you can't call it a system when you do just two trades, but remember the week before we did two trades and both of them were big winners. So when we do this on a regular basis, then you can call it a system. And so far, this earnings season and each and every earnings season, we are crushing it. So let's talk about earnings that we get into this week. And I have another little slide for you here. If we can pull up our earnings targets for this week, let's talk about some of the bigger names that we have this week. Tomorrow, we have a few coming out. And those, excuse me, I popped it up again. Sorry about that. I was just trying to get a little zoom in on it because my eyes are not that great. But we have Home Depot tomorrow morning. We have Cisco Wednesday afternoon. We have Target Wednesday morning. Brinker International, which is a restaurant. They own a ton of restaurants like Chili's and other restaurants. They're Wednesday morning. Walmart is Thursday morning. That's probably a good bellwether stock this week to pay attention to. And Deere on Friday morning. So Walmart, Deere, and Cisco, those three really, as far as names go, are some of the key players to watch that might kind of move the market. I would say maybe even Home Depot, throw that in there. That's, again, tomorrow morning. So there are, even though we're on the back side of earnings right now, we still have some big names that are declaring, and these could move the needle a little bit on the major indexes. Now, sometimes these big names, though, aren't the key stocks that we like to watch or like to trade around earnings. So this week, I got 2 more names that we're watching, and we're going to do the same thing. We're going to stick to straddles or strangles. Now, real quick, the difference between the two, straddles is buying a call and buying a put at the same time, at the same strike, with the same expiration. All right? That is a straddle. A strangle is you're also buying a call and buying a put, but they're done at 2 different strike prices with the same expiration date. All right? So right now, we've just pretty much been doing straddles. And the reason for that is when we do a strangle, it makes the break-evens a little wider. What I mean by that is the stock has got to travel further for us to make a profit. So I usually like to do a straddle just to keep things as close to the money as possible. So let's take a look at our first candidate that I'm watching right now. Now, this is the trade actually that we're able to kind of put on, because earnings on this stock are in 9 days. Now, sometimes I like putting my straddles on with plenty of time before the event, because the stock can move. And my rule is when I go out, beyond 7 days, if I do 7 or 10 or even 14 days to earn it to the event, that gives me the opportunity to actually exit the trade before the event. And usually my rule is if I get a double-digit return on that trade before the earnings event, I'm out. So if the stock moves,
who wants to stick through
right?
earnings when you got that double? That's so much risk. I'm out too,
Right.
Jeff. I'm with you 100%.
I'm out. In 10 days, if I can make a 15% return, why not? I mean, it's that's where it is. So on Bath and Body Works, the symbol's BBWI. As you can see here, we have this risk graph where the black line, which is at expiration, black line goes up and the black line goes down. And then we have the light blue here. This is my break even on the trade. That means at expiration. The colored lines are the time before expiration. So, for example, if this stock moved up to $41 tomorrow, okay, I could come out to this red line and see that, oh, I made $115 on this trade. Okay, profit, $115 profit. All right. However, if that didn't occur for 12 days, you can see that would be the green line, and then I would be at a break even. All right. So that's why I'm putting this trade on with a little bit of time to expiration. I'm going beyond the 9 days for my expiration, going out a little bit in time, and then waiting for this stock to move. Now you can see one earnings event right here. In fact, I'll go back to my chart here and I'll show you. We'll put it on here, and you can see, you'll be able to clearly see here that around these earnings events, okay, here's one right here. This little gap right here is an earnings event. All right, this stock can gap. All right, let me clean up my chart a little bit, take that Elliott wave count off, and then you get this big bar right here, okay, another earnings event. And we may or may not have made money on that bar, but you just go back in time. I know that this back here was another earnings event. Look at that big gap right there. All right, so that is what we are looking for. I love when we get a little bit of consolidation going into these. And so that's why we are going about a week out. We're going to be prepared for the event. So we possibly could be out before the event, or we'll live through the event to see what happens. Now, one other trade that we don't have time to put on because earnings are tomorrow morning is on a stock called On Holding, ONON. We're doing the same thing. Earnings are tomorrow morning. We have consolidation going on right now. I'm looking for the stock to pop tomorrow morning, take some quick profits throughout the day possibly, or I might wait a day if we get a big candle and it moves up or down. Let's see if we get some follow through. Not enough time since markets are closed at the time that we're putting this out there, but this is the type of trade that we do through our service. All right, so I would love for you guys to not only subscribe to our channel, but you'll have the opportunity to join live trading with me as I put out trades each and every week, delta neutral style. All right, that is my style of trading. I love trading delta neutral, where I have the ability to make money when stocks go sideways or break out. Okay, it's a great way to trade, and the potential returns are enormous. All right, so with that, Brandon, anything else come up during our session? I mean, we got 2 stocks that we're watching, just like last week. Lots going on, even though the markets are being kind of quiet.
No, Jeff, that was a good session. I look forward to seeing how your trades do every week and following along with those. You've been crushing it lately. And just like Jeff said here, you guys can sign up at ewotrader.com/DNT-trial to watch trade in his mad lab of trading, I guess they say. But you can watch Jeff do his stuff. And this is so cool to watch. But Jeff, I appreciate your input on this stuff. And we will see you in the next week here.
Yeah, it's going to be a great week. Look forward to all the things that are going on. Mostly earnings announcements, not really anything major economically, but I love Mondays. Start of a trading week, each and every week, tons of opportunities. So everyone have a great week, and we'll see you next week. Take care.